All right. Yes, sorry about technology. All right, welcome to my show. Today I'm going to speak of another interesting topic. You're welcome. If this is the first time you're joining me, you're welcome. This is Dr. Adesanya show where I share resources to help SMEs thrive. Of course, everything I share is for informative and educative purposes only. All right, so important for you to work with a professional, a CPA. If you don't have one that you're working with, please navigate to my website and just set up a consultation with me. All right. So this topic today is all about substantiation, which is how to show support for your expenses. Now, right now is the tax season. And of course, we're really trying to deduct all those expenses as a small business owner, as a small and medium-sized enterprise. You want to maximize your deductions, right? Exciting, exciting, exciting. I mean, okay, let me take it back. I know tax is not exciting, so I'm not going to say exciting, exciting, but you know what I mean. The less tax you pay, right, the better. Of course, we talk about tax planning, we always talk about tax avoidance, not tax evasion, because tax evasion is criminal. We're not talking about that. But of course, tax avoidance, where you would really deduct as much expenses as you're allowed to deduct. Of course, making sure that you have support for those expenses. And why is that important? You don't want down the line, after deducting those expenses and getting a good net refund, maybe at the end of the day. You don't want it to be that there are some amounts that will be denied because it's not I mean, you don't have backup. You don't have, for assuming you get audited, you don't have backup. You don't have support. You can't substantiate those expenses. Now, a lot of people worry about, oh, how do you keep receipts and all that stuff? Well, it's very good to keep receipts, right? But I always tell people as much as possible. Of course, keeping receipts very, very good, but as much as possible, I tell people, if somebody, as a business owner, if somebody pays you cash, please take it. I'm not saying do not refuse cash, whether they pay you cash, check, is credit, debit, whatever, get your money, right? Don't say, oh my goodness, I'm not taking cash. No, I mean, I would prefer, as a business owner, as much as possible, encourage payments where you can track payments, right? Where you can trace payments, because you can any transfer from the bank, any check, any debit, all those things are easy to track. But assuming someone says, you know what, I want to pay you with, I don't want to pay you like that. I want to pay you, I have some cash that I want to just pay for a product, for example. Of course, you won't say no, right? Collect your money, right? Now, on the flip side, expenses, right? I always tell small business owners, as much as possible. In fact, almost 0% paying things in cash. 0%. That's what I would say. As much as possible, pay with something or a payment method that you can have a paper trail. What do I mean by that? Just like I said, when you're receiving money, right? Pay with your check, pay with your card, pay by wire or whatever Zelle transfers. Pay in that way, right? Why is that important? Because you can always substantiate those expenses. You can always say that, okay, yes, and of course, you can back it up with receipts. But in addition to that, I've talked about this before, but I will just highlight it, on a higher level. I'm not digging into this. But remember, if you watch one of my shows where I talked about commingling funds, right? Make sure you have a separate business account. Do not mix your personal expenses with your business expenses. That's a big no-no. No, no, no. Make sure you're separating your business expense from your personal, right? I mean, you don't want to mix anything, right? You want to make sure that it's separate. Now, there are times, and I've heard this before, but oh, my business doesn't have money right now, right? I mean, maybe there's a gap, you're really expecting payments, and you have money to pay or give your business, right? Or and maybe your business has expenses to incur, you can actually issue a check or transfer and write it there. This is either you can make it an investment to your business, or you can say a loan to the business. And there was a paper trail, and we see that, oh, you transferred 30,000, 40,000 into your business, 20,000, whatever, into your business. And then later on, you can reimburse yourself, and that's it. You see that, all right? So And the business, when you transfer the money to the business account, for example, right, maybe it's 20, 30, whatever you transfer, the business then will use that money in its account, right, to pay the bills or pay that expense or buy the products, right? So let everything, all expenses come out of the business account. So, okay, so that's, you can, and then of course, if you want to print out a credit card business credit card statement or something like that, you will see whether it's credit card pay statement, or when I say something like that, I mean credit card statement or a bank statement, everything will be from the bank, from the business. All right. So our goal here is to make sure you can defend any expense you put on your tax return, right? You want to make sure, right? I tell them I'm always strict with my clients, and people, oh, I mean, am I, people, oh, that she's not is she auditing? No, a lot of people understand. For me, I mean, I really, really take the client's interest really seriously. Why? Because I don't want the kind that, my client gets audited and then there's a problem. So I ask questions and I say, oh, are you sure? Where's this? Just to make sure that they're comfortable so they can defend any figure on their tax return. They can defend any debit, any deduction, I would say, on their return. So what am I saying here? At the end of the day, it's not bad to keep receipts. Of course, you are supposed to keep some backups, some receipts, and that's fine. The beauty of this, actually, there was a client, or there is a client of mine that actually, if they want to make any kind of payment, they actually attach the receipt to the invoice. Beautiful, beautiful. All right. It's easy to say, okay, this payment is based on these receipts. All right. But if you don't want to do it that way, if it's like you can, I mean, of course, the payment I said is maybe it's a kind of payment for someone paid something and you want to put that money and reimburse that person. Of course, those expenses should be attached to any kind of payment that you want to give. At the end of the day, we want to do what substantiates, right? Substantiate any payments made, right, to any of our clients, right, or to any of our client customers. We want to make, should I say vendors, as opposed to, I mean, of course, customers pay us, but vendors, I would say. All right. So as much as possible, right? Or even if you're buying something for the office, buying something, thing, it's easier to substantiate when it's coming from a form of payment that can be traced. That's your goal. That's the best way, right? To make sure that you're not, as much as possible, I would say 0% in using cash to pay for your expenses is really a better way to go. All right. All right. So I hope I've shared something that is useful today. And of course, as I said, everything I say is for informative and educative purposes only. And finally, right, to to thrive as a business, right? As an SME, you have to be intentional. Thanks for being here. All right. See you next time. Bye for now.